All right, what's up, guys? Anthony here, Special Analysis. Welcome to the video. We're going to take a tour through the Nasdaq 100 for early risers. Guys, there was a killer opportunity this morning around 6:21 a.m., and I kind of want to talk you through it because the early morning session, kind of crappy, had a little push through the opening bell, and then we really fell into really garbage price action. I mean, the only thing I saw later in the morning after 11 a.m. was a little setup on crude that just hit its first target and basically ran out of steam. But I want to talk about this Nasdaq one because it checked all the boxes. And guys, I recap these videos and I shoot the videos using my trade plan, what checks my boxes, so that you guys can have a greater understanding of what traditional analysis looks like, pairing in momentum indicators with price action and volume. For me, that's the complete picture. You can, having an understanding of this, you can apply it to any software indicator that you choose to use. I mean, I'm not here to tell you what to do. I'm just here to kind of teach you the way, at least my way. All right. Like, I've done this now. I'm on my 12th year. This will be my 13th year trading. I can tell you from experience, I've had a lot of losses, a lot of struggles, emotional challenges, mental challenges, all affiliated with trading. Like these, this is not an easy industry. The majority of my clients are retirees or approaching retirees. I don't normally work with, clients younger than myself, simply because they don't have the patience for this. Day trading is not an easy task. It requires a great deal of patience, discipline, and I have found that my 40 and up clients are much more suited for this. My younger potential clients are more interested in watching, the drama on YouTube, thinking they're going to make $1 million overnight, and that's not how it works. I've been in business for myself my entire adult life. I have been through every aspect of all different types of businesses. I have a full understanding that trading is a business, and if you don't understand that as well, you're going to probably struggle. So I'm here to teach you about price action, interpretation, volume, the indicators, and all that kind of stuff so that you have a full understanding of it. But beyond that, there is definitely some toughness that comes into play, which, you have to see if you're able to do it or not. Okay, it's not for everybody. So let's talk about the Nasdaq 100 again early this morning. Price action here starting to really kind of generate some momentum to the downside. Little tough to maybe try to enter in here. Got a little consolidation with a huge move. I don't like to enter off of big moves because it just generates way too much risk. You can see we consolidate here, take another decent sized candle, but right into what would have been my first target. So all of this to me is unusable. But this area right here that I have marked off is not. This is extraordinarily valuable to me. I know that on multiple time frames, I have momentum to the downside. I know that I have a strong presence of sellers down here. I know that my longer term, and of course, I see that my shorter term momentum indicators are all in play, telling me that, hey, there's probably a good chance that if the ball's rolling downhill, it's probably going to continue rolling downhill until it finds some reason not to. So here's my break, this big candle here below the weekly and daily pivot. Okay? I would not consider entering on that candle. I am now looking for a period of consolidation, perhaps even a correction. And that is going to transpire in a period of anywhere from 1 to maybe 3 to 5 candles. Okay. If it drags on too long, there's a better than not chance that it's not going to follow through. So I mark off the top of the body of this candle here, and I mark off the bottom of the body of this candle here. Okay. Sellers are in control, even though we had this big push up. Now what I'm looking for is the next candle or next sequential candles to close below this or start to build some type of sideways momentum, some type of sideways consolidation. Well, it didn't build sideways. You could see that the sellers came in control. That candle opened, retested that upper line I had drawn off at the top of the body of that candle, closed below that lower line, and really basically closed at the bottom, right? So the low was 98. It closed at 98.75. So just 3 ticks off the bottom there. So you can see that the sellers were really in control. So right here is where I want to enter. This is my desire to get short right here. Okay. I get a little pullback on this candle here. Got plenty of time to place a limit order and get filled. So my entry again, close of this candle here. My first target is going to be at this pivot right here. Okay, so this pivot affords me 242 ticks roughly. Now, what am I risking? The candle that I entered on and the candle before, which puts me at about 50, 56, 58 ticks worth of risk. Listen, if you're trading the Nasdaq, you got to get comfortable with that size of a risk. If you're not trading the Nasdaq, then if you're not comfortable with that size of a risk, then trade the S&P. Okay, it is what it is. The Nasdaq is an animal, and you need to be able to kind of swallow what that animal delivers. So, of course, we'll look at liquidity. If we start to find liquidity somewhere here in this area, we would likely start taking some profit. And then move our stop to break even, right? So our stop's at break even all the way up here, and we never go back against it. Ultimately, we hit target 1, so that gave us about 240 ticks. We went on to hit target number 2, which is this weekly pivot, which gave us some 336 ticks. We went on to hit the next daily pivot at some 647 ticks, and even went on to hit this weekly pivot down here at some 828 ticks before you can see that the market just kind of dancing around. We did dip below. We'll see where we close at the balance of the day. It's currently 245, but from entry to the last, at least at this point, the last technical target, you got over 800 ticks. Listen, if you're not trading with multiple contracts, it's okay. But they make this thing called micro contracts, right? If you're a 1 contract trader, you may want to consider buying 10 micro contracts and starting to train yourself to pay and protect yourself as the market goes in your favor. If you're trading with 1 full contract and you went to 10 micros, which is equivalent to the same amount of risk, you could have sold, or covered, I should say, 2. Covered 2 more, that's 4. Covered 2 more, that's 6. Covered 2 more, that's 8. And then, if the market goes lower into this next daily pivot, cover your last 2. Just my opinion. You can do with that as you please. You go wipe your butt with it. But if you want to understand where how the big money is made, the big money is made with, as soon as you approach your first target, you take some profit, you move your stop to your entry. Now you're playing with market money. In a casino, you would call it house money. But we're not gambling. We're strategically trading. Cover 2, move your stop to break even. Now, no matter what happens, you've paid yourself and you've protected yourself. Cover 2 more. Cover 2 more. Cover 2 more. Maybe you cover 2 more. Now, if you're not comfortable holding overnight, which most people aren't, I mean, I don't hold over the weekend, but, if you want to hold overnight, that's fine. The market reopens at 6 p.m. Eastern Standard Time. You can either leave those 2 running and throw a target out here to cover them, or you could very simply just close your position. Either way, guys, I mean, this thing ran like crazy. You're going to take small losses along the way. This approach will offset your small losses. Because if you just took, and don't get me wrong, this was like a 4-to-1 risk reward. That's wonderful. But this down here, I mean, This is like a 12 to 1 risk reward ratio, maybe more than that. And just the portion of your trade that you're covering here will offset a bunch of small losses. Listen, you can do whatever you want. I'm not here to tell you what to do. I'm not a financial advisor. I have no understanding of your own personal financial situation. What I do understand is trade planning, trade management, trade execution, and all the things that go along with traditional technical analysis to identify low risk, high probability areas. Am I right all the time? Nope. Will I ever be right all the time? Nope. But can I teach this to you? If you're willing to be patient and disciplined and consistent, absolutely. There's links below this video. Click on them, consume the content, send me an email with your questions. God bless.